So I'm going to give a brief update on how the markets are doing. Today is 19th of June, and we're all now starting to go back to work. Hashtag stay alert, stay safe, practice social distancing. And I just wanted to share with you that we actually have 20 years experience in managing clients' investments. We've been through this, the dot-com crash. We've also been through the SARS outbreak and even through the global financial crisis. If you remember, in year 2008, started late 2007 and it lasted until 2009. We saw the fall of companies like Bear Stearns, huge companies, investment companies, Lehman Brothers, and the bailout of AIG. So these are companies that no longer, this AIG is still around, but they've actually gone through massive restructuring. Now this season, we're actually going to see a lot more smaller organizations, and in the next few weeks, months, you'll see some large organizations as well going through restructuring. In Malaysia, you can find brands like Esprit closing down, Blue Ink Media, the publisher, a huge publishing company, BBDO also closing their office in Malaysia. 15% of hotels, you've already read that a lot of hotels are closing down, either to renovate, so to open next year, or when the markets are more favorable. In the US, you've got a lot of chains closing down. You've also got, as you may have heard, 2,000 kopitiams that are going to close, that have not opened actually since MCO came back. They are not opening because they can't afford the change. So these are some of the changes that we are all experiencing. AirAsia has already announced their termination of staff, and we also, yesterday I actually spoke to one of my clients who is a Malaysia Airlines pilot. He said that they are also looking at restructuring. They've not been told yet, but they may be getting a bailout from Khazanah, but it's still in the works. Flights are continuing, a lot of cargo flights, but recently they've started to take domestic flights, and the numbers are increasing because now they were encouraging domestic travel and tourism, so we're getting some uplift there. But AirAsia is already being a private entity. They're already needing to manage their books, so they have already started to terminate a lot of staff. Ladies and gentlemen, we are in a pandemic and pretty new territory compared to whatever we've been going through before, which the most was an epidemic. Pandemic is entirely new territory, but it is also, and of course, it's a new normal. We all have to wear masks as we move around. But history has a way of repeating itself. History has a way of repeating itself. And we already can see that in the way the markets have moved. So just allow me to share with you, just to share with you this quotation from Warren Buffett. Be fearful when others are greedy, and be greedy when others are fearful. So let me just quickly take you through what happened in the last few months. We had a major correction in the markets globally, in all markets, in February, March, and we've seen the market steadily come back up. You've had the Federal Reserve in the US doing a lot of pump priming, doing a lot of printing of USD and flooding the market with USD, and a lot of governments have actually been coming up with stimulus packages, keeping companies afloat to keep things going. So you have a lot of support from the central banks and the governments to keep things going. And like in the screenshot you can see from Stash Away. This one I just took it a couple of days ago. One of their webinars, where you can see right now we're in June and we already see levels of pre-COVID almost. So we're almost reaching the same market levels as it was in February, March. So you can actually see market recovery. And this is from Bloomberg, which another slide which I got from iFast. You can actually see the bounce where the CI had dropped drastically in February, March, and it's already bounced back up. Now, there are a lot of people who have made money in this period. They have been investing. Those who are very informed, they've actually gone into the market and bought. And this graph actually shows you the amount of returns that investors have made just in that March period. And you can see the up to 40% taking advantage of that down period, and they've actually bought and turned that crisis into an opportunity. Now, this is an important, very, very important slide. For a long time, we've actually been waiting for market volatility. The market has not been volatile and has always been very flat, especially if you look at Malaysian market, has been very, very flat. And it's difficult to actually grow investments when you have very little volatility. Well, good news, sometimes volatility sounds like a scary word, but in this scenario, we need to look at volatility in a very healthy manner. When there is a contrast in the economy and the market, you have a very big contrast where you have a lot of pump priming in a weak economy. The market volatility actually goes up. So you can see in this graph, which is a very interesting graph that Bloomberg has shared, the rolling annualized volatility. You can see the high points. This was actually in the Great Depression, where volatility was very high as well. Then in 88, in 2008, this is our last global financial crisis. And now back in 2018. So in this period, you can see how volatility has returned to the markets. So for an investor, this is actually very, very good news. So this is a good spin to what we are actually looking at the markets. So this graph actually should make us all very excited. Now this next one, where to invest, and I thought this was a brilliant graph because it shows you the P ratios of all the different markets, and you can see which equity markets are very expensive and which are the cheaper ones. Of course, we try not to go for the H shares. China A shares are already very good, and you can see they are already undervalued, so there are very good buying opportunities here on the right side of the graph, and maybe on the left side, you already have a lot of factors already priced into the equities. So you can see the ratios and the prices are actually much higher. So where you want to invest, you can actually go across the board. But of course, you might want to buy a little more cheaper. Asia ex Japan on this side, emerging markets, and China A, Hong Kong. These are very, very good and affordable spaces to actually buy in this season. This gives you an idea of where we are now. Not to whitewash the scenario that we are in. We are still in a pandemic. We do not have a vaccine. There is a real possibility of a second wave. In fact, Beijing, as we speak, Beijing is going through a heightened number of cases. So Beijing is actually going through a systematic lockdown and increased testing. So there is a real concern for a second wave. And of course, when you have a second wave, you'll have more lockdowns and you'd have lesser economic activity. Of course, when we look at China, which has a lot of more control, they will actually be able to weather the second wave a lot better, especially because they've already had the first wave. So they've got the experience, they are more prepared, and they have the ability to do lockdowns more efficiently. So that is a very good example that the rest of us, the rest of the world can take. Now, how the rest of the world will do it, we have to see. But the possibility of a second wave is really there. So I just wanted to quickly let you know that we are not we don't whitewash anything, and there is also the reality that we are in a global recession. IMF has already seen that. You can see in this graph, the global economy, advanced economies, the EM and the developing economies, all are in the negative range. Of course, we're looking at a bounce back. 2021, these are what we call outlooks. These are outlooks, estimations, where you want to see the best bounce back, of course, is emerging markets, but generally you would want to put a little bit in global economy and emerging markets if you want to look at a bounce back for next year. And of course, the growth areas would be US and China. China is actually heating up very, very healthily. Now, this is a very important slide because it is already changing the way that we work. Which are the areas in which we want to focus on? A lot of infrastructure stocks that are doing 5G, bandwidth, computers, everything that is online, that is logistics, that's buying e-commerce, and of course, very importantly, healthcare. These are the themes that are very, very hot at this point of time, and companies that are in this space are companies that are doing extremely well and will definitely survive and thrive in this global recession. So these are the counters that we are looking at. Now, this is from Fund Supermart. If you're looking at in terms of ratings and which are the attractive areas, so they like very attractive areas, of course, Asia ex-Japan, emerging markets, and the different countries. You're looking at everything that's East Asia. Everything East Asia. They look at US as not so attractive. So the jury is out on that. Some people will actually still still bang on US and want to put a little bit on both sides. This year being election year, so we are actually looking at a lot of good valuations for the US as well. But this is something I'm sharing with you from Fund Supermart that we can consider. So I'm going to just hand it over to Hazel now, and to take you through the second part in terms of where exactly and what are our actual recommendations for this season that you can consider. All right?
Hi everyone. So as you know, those of us who have been with you in this financial journey, we have been here. Hi Majid, we have been here with you for almost actually 20 years. Yeah, we started the industry in year 2000, and we have seen many crises in between the time we started and until now. And as Patrick said, there is always an opportunity in every crisis. Yeah, there's always an element of danger, but an opportunity is there for us. So Patrick, can you help me to click the next slide, please? Oops, there's many things opening up. Next.
Okay.
Okay, so this slide we're going to share with you some of our fund that we like, the wish list that we have. Yeah, I will not talk about all the funds. I will share a few of the ones that I personally like. And if you want to have more questions, you can always speak to us later, or the person who invited you to view this video. Yeah, first on the the list is Big Cap China Enterprise. Now this fund, I like it very much because as you have seen earlier, Patrick showed you that China is still a very good place to invest. And this fund invests in the bigger companies in China, companies like Alibaba, Tencent, China Construction Bank, Ping An Insurance. These are very strong companies, and the foundation of it is of course the strong big tech companies in China. And I want to show you a chart afterwards that you can see that this fund has gone back up to pre-COVID levels now. So it had only a short time of a dip. And for those clients, and if you're one of them, I congratulate you that during that sharp dip in March, you invested. Clients have already seen a good profit because it is back up to the pre-COVID levels. Yeah. Next up is Asian Income Fund. Now, Asian Income Fund is a fund that I like very much because unlike Big Cap China, which is a high risk fund, a higher risk fund, Asian Income is a mid risk fund. In fact, it's about low to medium risk, and it's a mixed asset fund. We just had a very good chat with the fund manager from Schroders, which this fund is feeding into. And Asian Income Fund is going to invest in this season utilities, telecommunications, and sectors of what do you call it, REITs. REITs that go into data center REITs means these REITs will be renting out to tech companies. Yeah, they want to rent out to people who are like Google, Tencent, and Alibaba, who are now doing very well in this economic climate. Okay, I want to show you a slide afterwards that the level has not gone up.
Okay.
No, later. The level of Asian income has not gone up to pre-COVID levels, which is really great because it is an opportune time to invest in this fund. The other factor I like about this fund is it declares distribution or dividends every quarter. Yeah, so it does its own dollar cost averaging without you investing, but if you do both, means the distributions as well as dollar cost averaging, this fund is really good, and it's not so high risk fund. So for people who do not like to see sharp drops, this would be a fund to look out for. Yeah. Okay, after Asian income, there is the Islamic Global Developed Market Fund. Now this fund invests in US markets but into tech sector. You will see companies like Facebook, Microsoft, Alphabet is actually Google. And this fund, I just looked at the chart just now, it is almost back at pre-COVID-19 levels. Yeah, so those who invested during the sharp drop again have seen very good returns. So they are into cloud computing, social media, internet search and digital advertisement, and software companies like SAP, Adobe, and all those companies that Patrick showed you just now that are doing very well now. They are also into pharma. Yeah, pharma is a sector that is very important now. Okay, next up is Sharia China Focus. Now, Sharia China's Focus, we had the opportunity of meeting the fund manager because with now all this new tech, we meet the guys in China easily. And when we met him, he was very happy to report that China had gone back to the supply chain has resumed. And when the manufacturing started again, this fund is so crazy, it has gone up beyond the levels, means higher than before COVID. I can show it to you that before COVID,
all-time high.
yeah, it's really like, doing so well.
This one is only, I think, almost 2 years old only. It's not a very new fund. It's not a very old fund. It's a very new fund, and it's actually reaching heights. It's already not just recovered, but it's already reaching all-time highs.
So that is China focus fund. So some of you might think that have I missed the boat? Am I too late? What we have heard from our fund managers recently, like the fund manager from Schroders and the fund manager from Nomura, which is handling the Islamic global developed markets, they say that if there was a second wave, and because markets are still, not really flat, there will be volatility and there might be still opportunity in the future. So watch out for that. The next fund is multi-asset regular income fund. It is very similar to Asian income fund, and why I like it, although unfortunately you can't use your EPF for it now. It is a very good fund to have in your asset class as well. It's a mixed asset, and it has a great potential. Yeah. Also, it has gone back up to pre-COVID levels in a short while. I will move on. I will not talk about the other funds. Next. Okay, this is what I promised you. So big cap China, as you can see, pre-COVID levels will be 2019. Yeah, and then the sharp drop would be sometime in March.
Yeah.
Yes, and after that, it has bounced back to pre-COVID. Yeah, next. Okay, Asian income still there's a good opportunity.
It's an L recovery.
So it is very good that people who can come in now will enjoy the benefits into the future because they are investing into REITs that are actually renting out to tech companies, data centers. So that's a very good sector actually. And also before this, they had switched their REITs from those malls like Takashimaya Pavilion or the tourist malls. They have destination malls. They have switched the REITs to your neighborhood malls, things that the malls that sell grocery and neighborhood people would just go and buy. So that's very important for the fund. Yeah, and as it changed to accommodate this new normal, this pandemic era, we're going to get it at a good discount now. So it's a time to invest in it.
There's a question that says there's a question here that asks whether Asian income is EPF approved. Yes, EPF has approved investment for Asian income, and it's actually an award-winning fund by Schroders. So it's definitely a good time to pick up some Asian income.
Yeah, and waiting for another drop. As I said, you can pick it up gradually because we do not know when is the big drop. Yeah, so people who have been waiting for a big drop sometimes can miss it because it comes and it goes so fast. So what we always advocate is sedikit-sedikit lama-lama menjadi bukit. Yeah, that is still the best way, which I will be talking about shortly. Okay, this is the Islamic Global Developed Market Funds, the one that is mainly in US, but in tech stocks that are giants, yeah, like Facebook, Microsoft, Alphabet, and all the big companies. Besides that, they are into pharma as well. Also, some good stocks that invest in like credit card companies. Yeah, because they believe that money will be losing its what is that? Flavor or something. Amos was saying that people like to use digital money now, credit cards. So they also invest in sectors like that. Okay, global equity yield. This one I did not talk about the fund, but as you can see, the V formation is there, and these are funds that are doing very well. Next. Same. China Sharia focus. Remember, I said that is already past the pre-COVID levels. Pre-COVID was say January or December of 2019, but after the sharp dip, it has already gone beyond and done better than before COVID. Yeah, so this is a very strong fund as well, but it is a very aggressive fund. So if you have it in your portfolio and you're not so aggressive, then I would recommend it to be just a little kicker, a small amount, or depending on your risk appetite and your time horizon. Okay, MARI is the one multi-asset regular income that is similar to Asian Income Fund. This you can only use your cash to invest, and it has again, like I said, gone up back to the pre-COVID levels. Okay, you can see, without me telling, that it's also back up.
All these are quite clear V form
V formations.
Yeah,
Recovery.
V recoveries. There are L recoveries, U recoveries,
and W's.
And also some W's.
Okay, as we have been saying from the beginning of our career until now, there are proven strategies for unit trust, and the reason why people do not make the money sometimes is because they do not follow all these three strategies consistently over time. If you are one of them who have been doing that, you would have enjoyed pretty decent returns over the long term. Yeah, so it is long term, 3 to 5 years. But usually when I tell people long term, clients will think in their mind is 3 to 5 months. Definitely not. Yeah, and some people are thinking in terms of days or hours. Well, no, we have to train ourselves that if we're doing a unit trust investment, not trading, it would be long term, 3 to 5 years. 3 to 5 years is actually mid-term, medium term, and 5 years is the shortest long term, and beyond 5 years would be entering into a long-term strategy. Yeah. Okay, let's see something. Okay, I will share something on the question, what is the return for Asian income 3 to 5 years? Josephine, which is the fund manager from Schroders, shared that it's about at least 7 to 8% over the long term, and she predicts
7 to 8 per annum.
per annum, average return, and she's saying that even this year with that dip that we experienced, the fund will be doing about 5% for this year, and moving after that beyond, if there is a stability in the new normal, it will go back to its regular returns of about 7-8%. Yeah. I can send you the fun fact sheet later. Yeah. Okay. Where am I?
DCA.
All right. DCA. This is like my favorite thing since I joined the industry. Regularity using dollar cost averaging, and in Malaysia we like to say ringgit cost averaging, so it's RCA. Yeah, I will show in detail what the DCA looks like, and you can experience it with me shortly. And the last factor is there must be regular or periodic review. Yeah, because nothing stays the same, everything changes. So now new normal has, us wearing masks and doing things differently, and so therefore we must always review our portfolio, tweak it, rebalance it professionally.
I think I just want to make one point on that last point, review. Buying unit trusts is not just about, oh, I'm buying the best funds and I've got the best funds all the time. You need to do a review with a qualified professional. I need to let you know this. I want to share this with you. This afternoon we went to visit one of our $1 million clients, and this client has been with us for a long time, and we are managing his portfolio. And so being a retiree, for us it's a natural thing to ask him, is there a liquidity that you need to have from your portfolio, meaning do you want us to redeem some amount so that you can sustain yourself for the next few months? And his reply is very nice. He said, I don't need any more money because of what you guys have done. So it is very heartwarming to hear such a thing, but it's important because it gives us an important responsibility to manage the client's portfolio continuously, even after they have stopped adding more. So that is a responsibility for every professional to their client, to do reviews regularly. Twice a year. You don't need to do it very, very often. This time we're doing it via video. We've not done this last year, and we've not done this, I think, for years before, because we've always been able to meet our clients. But now, because of new normal, we're coming via video because we can't see everybody at the same time, and it is actually just more efficient. So we want to be able to communicate with you this way and give you as much update and value by video, so you can get more value through our engagement.
Yeah, we are learning the new normal way of life now, so bear with us. It may be a bit inelegant initially, and hope with your feedback we will be able to bring you better. Yeah. Okay, next. I think I'm supposed to now share. All right. Audio, I'll be using that side. Okay, can you all see me? Manjit, can you see me clearly?
Yeah, sure.
Alright, so this one, if you've been with us for many years, this is just like a revision of what we have been doing with our clients over the years. As I said, this is my favorite thing in the industry. It is actually called dollar cost averaging or ringgit cost averaging. So I would like to take you on a journey with me. Yeah. So when we meet our clients and they are investing 1,000 ringgit at 1 ringgit, a client gets 1,000 units, right? Okay. Say the next time we meet the client and the price falls to 75 cents. Now first, how would the client feel? Yeah, naturally, the client will feel that, oh my goodness, I just lost like 25%. But if we would ask the client to retweak the mindset, it would be actually a 25% discount.
This sounds like sometime in February, March, right?
Yes. So some will, some won't, but it's okay because those who will enjoy it. Now, if ever your fund drops to 50%, you have to train your mind to think that it's a 50% discount, yeah? I know it's not easy because human beings are emotional creatures. But if you can see it as a 50% discount, you get double the number of units. It means double the number of shares in companies like Tencent, Alibaba, Google, Microsoft. Just imagine when people are using Facebook now, money is going into your account. And what goes up must come down, and what comes down must go up. So, say the next time we meet is back to 75 cents. So, not as cheap as 50 cents, but still. Alright, so we have done a few investments, and this would be the total number of units and in ringgit, capital out of pocket is only 5,000, and back at 1 ringgit, the value is 6,666 ringgit, and the profit is actually 33.33%. Now this is important. If this happens within 3 years, your average return per year is definitely higher than 10%. Yeah? And even if it's over 5 years, it is still a strong single-digit growth. This is how unit trust works. And although, many of you have heard this before, you have seen articles about it, I think sometimes you need a crisis to remind yourself or even ourselves that this is still the best strategy over long term. Yeah, a lot of our clients who have been just saving for their children, saving for their retirement, little bit by little bit, have seen that this strategy has proven to be safe and very good, especially when you are going through that V formation that we have been showing you. Yeah, if unit trust or any investment is a straight line, and imagine that is your heartbeat, are you still alive? Yeah, to be alive, our heartbeat needs to do that wiggly thing, which is like investment. So I'm going back there. I hope that this helps you to rethink and relook at things differently to take the right action at the right time. And the time is now. Crisis gives you the opportunity.
So we have one question. We're just trying to take the questions as it comes in, so as to keep it engaging. We talk about entry cost. In light of what Hazel has shared, maybe you want to comment. When you look at dollar cost averaging, how do you address entry cost?
Well, for us, when we track our clients' portfolio, we actually look at the amount that they invested, and the returns that we are looking at would be the net of return when we present our report. But there are other ways of looking at it depending on how you want to look at it. But at the end, right, the important thing is if you do not pay for a service to your fund manager or to your consultant, then of course the service level is different. Yeah. What is the question? Because I didn't see it.
Yeah.
I just came here.
Hold on.
Hold on. I'll just have a look at your question actually.
Yes, but the entry cost, yeah.
Okay, so as I said, entry cost will always be there. If you have a service that is free or seem to be free, the level of service is like a DIY. Many of those online services will be like either very small cost or it seems like it's free, but of course we know that behind that there are charges. Yes, you may be able to make recovery faster, but without someone to guide you or to push you or remind you to do certain things over time, many people do not are not able to lah. Yeah.
I think to manage entry cost is of course for us it's for equities it's actually 5.5, 5.25 sorry, and for EPF it's flat 3. Right now
and now it's a 1.5.
In fact, yeah, actually for now it's actually 1.5.
Now it's only
even
1.5.
cheaper now. So actually it's a real good advantage for you to take right now to invest from your EPF because it's just 1.5%. However, I want to stress this point. If you draw an analogy, a lot of people like to, if you're buying Panadol, you don't need to go to a doctor if you're buying Panadol. Because it's a straightforward medication. You've got a headache, you get Panadol. Now you don't need a prescription from a doctor. But if you are having persistent headache, or if you have other symptoms that come together with it, why do you still go and see a doctor rather than go and Google, try and find an answer, and then go to the pharmacy and try and buy the medication, knowing also that not all medications are available over the counter. It needs to be prescribed because there is risk, so the same way that you get your services through a consultant, through a medical doctor, because he understands the information and he prescribes it based on what you can take and what you need. In the same way, financial services, you get a qualified consultant, professional, to actually track and manage your investments for you. and of course we will ensure that it works better than if you had done it yourself, or if you had just gotten it from the bank directly or bought it online. So there has got to be a value add, and that's the value add that the entry cost brings to you.
Yeah.
All right. So I hope that answers that question. Now, moving along, who do I want? Who do I want to be during COVID-19? Now, there are always different responses in a crisis situation. You can choose to be in the fear zone, I go and grab, and I have that fear mentality. I'm always very, very cautious, overly cautious. I don't have, maybe out of over caution, I don't take advantage, of certain realities that are there. The other zone that you could be in is in the learning zone, where you understand what you are in control of, what you are not in control of, and then you seek information and you clarify the information, by checking it here and there, so that you are correctly informed. So being in the learning zone, that is option 2. The third option, the growth zone. You look at what the opportunity is exactly out there. Whatever skills and talents that you have, you spread it out. You practice gratitude. You always keep a positive outlook in life. So that is the growth zone, where you are looking for, how can I look at this situation in the positive and in the bigger benefit. So we can always choose to be in either the fear zone, or in the learning zone, or in the growth zone. And the same thing applies to your money, your funding, your finances. So if you're in the fear zone, you will want to make sure all your money is just safe like that, without actually looking at, look, if I hoard all my money and I just keep it here, am I not growing it? Am I not taking advantage? Especially if you don't need it in the next 3 to 5 years, then it's very unwise if you just want to keep it all close to yourself. You should actually be taking advantage of market movements. This fund is actually offering a good value. I can actually buy into it and see the returns once things start to open up. So this is very important, to look at which zone that you choose to be.
I think there's some question.
Okay, let's look for some questions here. Oh, okay, so one question was, if the fund price is 5%, the entry cost is also 5%. If it is coming from EPF, it's 1.5. If it is investing cash, 5.25.
I think I have to look it's about 5.
It's about 5.
Yeah.
So the returns are actually, of course, better than 5%. We're looking at between was it 7% that you said?
7-8 like that.
7-8% per year. Of course, it doesn't make sense if when we're talking about 7-8% is net of charges. So that is the growth of the fund. So you can actually see actual returns. Net returns is about 7 to 8%. So
we can send the fund fact sheet over.
Yeah.
For more clarity.
Yeah. So the other thing is, another question is, if I withdraw my funds from EPF, will it go back to account 1? If you withdraw your funds from EPF, it'll go into the RHB account under your name, invested in those particular funds. And after you redeem your funds, it'll go back to your account 1. Account 1, it's not account 2, it's account 1. All right? So anyway, thank you for all the questions. Keeps it very engaging. Now, we just want to share with you some of the updates that have come up during this
MCO.
period. One is the e-submission facility, which is your ability to invest your funds via email. Yes, we will actually email you the the forms, because there's a lot of compliance requirements. But to make it simple, we actually help you to we have to compile the forms for you. We'll send it to you by email. You just need to fill it up there, send it back to us, and you can do your investments by online transfer to the RHB asset management designated account. And then we would, the RHB side will actually do the consolidation, and we will actually collect the hard copy forms later. So you can actually take advantage of it from your laptop, from your phone, from your PC, to make the process smooth. Just during this period, we've actually closed clients. We're actually in West Malaysia. We've closed clients from East Malaysia just by WhatsApp, by email, and by video call.
That is to qualify, is for cash investment.
Yes, for cash investments.
EPF investments, we still need the original copy immediately. But for cash investors, we can do all that Patrick mentioned earlier. And is Kevin going to run through this?
No. We'll do this part. All right. So I've covered this part. The process is very simple. The clients just fill up the related forms, which we will email to you. You scan, email, and WhatsApp. There is a function on your phone which is called, actually it's an app on your phone which is called Cam Scanner. You can actually do that, where you cam scan your forms and convert it to PDF, and then you can email it. Very simple. And then we will forward the email to our operation team.
But later we will still need to come and collect the hard copies.
We will do a consolidation later. So right now it's time to put on an investor cap together with your face mask.
Yeah.
So with your investor cap, we want to share with you that we have actually got a 1% rebate on fees, only if you would invest today. Connect with us on Facebook or wherever you're getting this video. Connect with us, and for equity funds, for cash investments of 20,000 and above, and we'll actually do it by reimbursement process. So for more details on this, please connect with us and we will share with you. So this will give you an incentive to take action. All right. In the midst of crisis, there always lies a great opportunity, and this opportunity is the offer that we're giving you. We also want to share with you some of our clients' testimonies here. You can also find our client testimonies on our website, www.synergyplanners.com. So you can read about what our clients are saying about us and the experience of us. So we've just put in a few of them here. Just to highlight again very quickly the wish lists for second half for 2020. Tough times never last, ladies and gentlemen, but tough people do, and tough portfolios also do. So just want to share with you, this is our website. Please visit our website, connect with us from there, via there, and also visit us on our Facebook page, facebook.com/synergyplanners. We are getting some questions. Let me just see what these questions are. Okay, if I want to switch from another EPF investments to RHB, how do I do that? And also, okay, so yes, you can actually switch. The process wouldn't be called a switch, it would be called a redeem and a reinvest. If you're looking at EPF, we will need to redeem from the other fund house. Of course, we want to make sure that you're making money before we redeem. And after you do the redemption, it'll go back to EPF first, and it'll still be subject to the basic savings table according to EPF regulation. And from there, we will actually do the withdrawal from EPF into RHB. All right, so that's the proper process. Also, please give me details as to reimbursement. So the details of the reimbursement, once you do your investments, and of course we want to make sure that you qualify within the criteria that we have set here, we will actually reimburse it back to you in your account. Whether you want to get it back, getting the offer back in cash, or whether you want it to be invested into your fund, that's up to you. So you can actually take it back either ways. We're flexible in that way. All right.
Just to add on, the EPF cases cannot be emailed lah. Only cash cases.
Yep.
Yeah. So I hope that is clear. But with the RMCO, we have started meeting our clients face to face again. But of course, with more caution, we use face mask and we practice sanitizing our hands with some social distancing in the mix. So do not fear us. We are healthy, and we hope to still bring the level of service to you, especially in a time of opportunity like now.
I also want to reach out in two other areas very quickly. For those that want to invest corporate, who want to do corporate investments, we are actually open to meeting up with you, doing needs analysis to find out what are the financial objectives that you would like to set for your organization before we help you to manage your investments. So please connect with us in that way, and we'll be available to meet up with your representatives. The other area for those who like how we do what we do. Please connect with us. We are looking to build up our team, since there are many people who are looking to grow their income. So we actually have certain vacancies. Since RMCO is now out, FIMM has just released today the dates for the next exams, and we're excited to help more people learn about how to manage money wisely. So we would like you to join and be part of our team and help to put money into your pocket and to help you build a career in wealth management. So please connect with us on Facebook, facebook.com/Synergy Planners. And do you have any final words before that?
Yeah, we are more active on Facebook. If you want to have a more active interaction with us, just send us a message on Messenger on our Facebook page.
We are available in both East and West Malaysia. So if you would like to reach out to us, we've got a team also available in East Malaysia. So we welcome all of your connections. If you would like to WhatsApp us, my number, how shall I put my number? But it's okay. Connect with us on Facebook, and then we will actually move over to WhatsApp, and we can actually have more direct messaging. All right. So if there's no further questions, guys, thank you for taking your time to watch this video and to be a part of this engagement. We hope that you would have a safe RMCO, a safe period in this 2020 with your families, getting back to work, and helping the economy get back on its feet. All right. With that, we wish you a very good evening.
Great evening. Enjoy your weekend.